Good evening to everyone. Today we are going to inform about the maintenance of the labor accounts and farm records in livestock farming is concerned. As one of the important topic is this one is one of the important topic. So, going further with this particular topic is concerned, the maintenance of farm records is also another important thing, especially in case of the livestock farming system is concerned. The thing is, the proper maintenance of the record is always indicative of the farm management in a profitable manner and also to have a outlook of the profitable dairy farming or poultry farming or whatever it may be. Yeah. Then farm record keeping, as it is one of the essential component of the or is especially profitable dairy or poultry or any type of the animal farming. So a simple record will always be earn a money to everyone. Sometimes we have to write a set of ledger sheets which contain several columns to keep track where the money goes and how we are going to earn the money. Hence, the record keeping becomes very important. Suppose there is a loss, what is the cause of that particular loss? All these things need to be known to us by record keeping. So the first step, especially in case of farming, is the transaction has to be done, especially in case of the money. Then it has to be written, especially in a written document format, and we need to have several columns, several rows, and the serial numbers, and many more times we need to have the different parameters, especially where the money goes, where it is invested, where there is a gain or the loss, and many more criteria need to be maintained. So the process of measuring and recording all farm resources and all farm transactions with financial consequences in a systematic way need to be done. But the accounting system takes a large amount of the farmer's time, but it is one of the very essential part of the dairy farming or poultry farming or any farming system, including the agriculture farming system also. Then the in a systematic way, one need to keep the farm records. Then accounting has to be done as a part of the farmer's life, and it permits the farmer to find the size of the income, how much he need to earn, how to plan, how to loan uh, payment, and also how to get the different loans also. Then what is a quantum of loss if it happens, or what is the quantum of the profit if it happens, or theft or cash or stock. So to provide the necessity data for correct income tax assessment, and of course the farming system is not under income tax in India, but sometimes if you want to claim the income tax rebate etc., one need to maintain the proper farming records. Then apart from this one, the expense for a work has to be very properly, it has to be maintained. Then coming to the purpose and use of the farm records, so the number one is it measures the profits or financial conditions of a farm and measure economic performance and provide a point of compensate comparison with the previous year or the next year, etc. And also preparing a budgetary provisions for the next year and also to get the loans from different banks and the institutional or the financial institutions with different type of the interest rates what they have paid to the bank and the subsidy which is available from government. And sometimes it also very much required to meet the legal requirements and also to regulate daily routine operations. And the management of the labor is also an art. Hence, the routine labor records, how many labors have come, what are all the works need to be assigned to them, then what is their input, etc., are the purposes of the use of farm record. Then the types of the record that must be kept in a farm are operating or physical records need to be maintained, just like the farm sketch map or blueprint or layout plan of a farm need to be maintained. Then apart from this one, sometimes the machinery maintenance may be there, or labors, then tools, then equipment, then production, marketing, and other than the thing that the demorages or any maintenance of the equipment and many more. Then apart from this one, the farm inventory record and earnings of the statement, then balance sheet, then cash in hand or cash flow system need to be maintained in a record in a proper manner. So farm inventory record means it's a complete list of all the assets that the farm owns and its value in specific point of the time. So what say, suppose if we open the record today, what's my asset total worth of it if I want to sell it today, tomorrow, etc. So the inventory should be taken in the beginning itself of the accounting year. Suppose the accounting year is the usually it is April to March of a particular year. So usually April 1 to the March 31st of the next year is the financial year. So the inventory to be taken at the end of the financial year will be the beginning inventory of the next year. That's what the opening balance of this particular year will be the closing balance. Closing balance of this particular year will be the opening balance of the next subsequent year. So farm inventory is the cornerstone for all farm record and is necessary, the first record to be considered by any farmer or farm manager at the operation of the farm business. So this is a full-time job, of course. The record maintenance is a full-time job. So the inventory means entering the list of the real estate, livestock, the quantity of the livestock, then cost of the equipment, feed, supplies, and growing the crop together with a simple description. Now, what are all the top crops grown in a year? How much real estate, especially includes the land, how much land is required for a particular farm, then electric systems, then fences, then solar dryers, water system, and other land improvements. So the land can be divided into cropland, permanent pasture, then woods and wasteland. This is a common pattern. Wasteland includes the spaces like roads, yards, and spaces around the buildings. Then machinery and equipment includes the list of each different tools and machineries on the farm. And this includes portable brooder houses, especially for chickens and colony houses of the bees, if it is a bee farming. So then apart from this thing, the nutritional conditions, especially the feed manufacturing unit, then also the fodder chopping unit, then all the list of the classes of the animals, starting from the heifers, cows, or bulls, all these things to be maintained in a particularly the uh, shed is concerned. Then the brood sows, then raised market hogs, beef cows, if it's a beef industry, but then breeding ewes, then lambs, hens, broilers, and all the animals should be in case of the livestock register. Means livestock register has to be maintained for each animal separately. Feeds and supplies on hand include all feeds such as starting from the hay, the silage, then grains, straw and the milk feeds. Whereas the other items include such as the fertilizers, then lime, then apart from this one the herbicides, pesticides, weedicides, seeds, post not said woods and other materials are also need to be entered or in the inventory register. So inventory must be monetary value and each and every asset has to be at least it has to be valued and every year the depreciation has to be reduced, then it becomes a perfect record. So there are two processes in taking the farm inventory, physical counting and valuation of the assets, especially. So physical counting always leads means manual counting of almost all the properties, especially cattle and means how many numbers. Or suppose the fodder is available with us, how many tons of the fodders, how many kilograms of the mineral mixture, all these things to be entered in the inventory register. So the inventory valuation is a process which can be completed using several methods to place a value upon each property. So ultimately, the main purpose of this thing is for saving, means how much quantity I can save, or the that's called as the conservatism, then consistency, especially the wastage, etc., need to be prevented very properly. That is the main aim of the record keeping. Then the conservatism is being continuous against placing too high value in any item. Hence, consistency stress the using the same method of valuation at the end at the beginning of the inventories. So the use of the concepts, especially the use of the concepts means the it makes the financial statements directly or prevents over the optimistic value of the firm and also the financial system. Then how we are going to evaluate or what are the valuation methods in farm system? It is number one, the net selling price or net market price. So this is used for items that are primarily held for sale. For example, in case of the poultry or the broiler, so almost all are there for the sale. Then any market changes such as the transportation, then sometimes the selling commission may also change. Then fees are sometimes the taxes need to be subtracted from the net profit. So the for example, if it is a livestock, the income is coming from livestock sale, the crops invested, seeds, fodder, livestock, and bonds, stocks, and like that. And purchase price is also another thing used for items which have been purchased recently for which the cost records are still available. For example, the feeds, the fertilizers, the chemicals, and veterinary products. So the other thing is cost of market prices maybe sometimes it may be different. Sometimes it may be low or sometimes it will be high. So at the good time, the cost of the market price at the particular time should be measured. No paper profits accrue and losses due to the falling in the market price are absorbed immediately. So the breeding up of the livestock is one of such thing. And farm production cost, this should be minimal. Of course, how we can know this thing? Because unless we record it in a systematic manner, it is impossible to know this thing. So the raised livestock and standing crops are always farm production costs. Then apart from this one, the cost less accumulated with the depreciation. So there is always a depreciation every year because there is what you call as the value of the current time period is equal to the original cost less accumulated depreciation from the purchase date to the date of inventory. So uh, all the goods start losing its original value. For example, the tools, the machineries, and equipments. All these things are, for example, the tools, machines, and equipments. They cost. Then depreciation is the allowance for the wear and tear of the capital items. Wear and tear, especially the capital items. So there will be a wear and tear every year. So that wear and tear should be properly measured. Then this is the main basis for the characteristic of the that particular assets. So depreciation means usually in every business, every year, some margin of the depreciation means it used to be maybe 10%, 5%, or whatever it may be. Every year, that's the wear and tear cost that will be there. That's called as the depreciation. Hence, it has to be reduced. See, so how we are going to compute the depreciation is it's called as the straight line, a method widely used. So this is easy to use method gives the same annual depreciation of each full year of an item's useful life. So suppose an equipment is its lifetime is 10 years, etc. Then it is called calculated as the annual depreciation rate, then is equal to cost minus salvage value, then useful life means total duration of that equipment. So that's annual depreciation is equal to, then into R is a percentage found by dividing by 100. So this need to be divided by 100, then annual depreciation percent will be arrived. Then declining balance is once again the annual depreciation is equal to book value into R. So R value is used for every year of item's life and multiplied by the book value which declines every year by an amount equal to the previous year's depreciation. So every year we are going to have the depreciation, then based on the previous year's depreciation, then the annual depreciation will be calculated. So sum of the total digit method is another method in which the annual depreciation is equal to cost minus the salvage value into R. So R is the remaining useful life and SOYD is the sum of all the numbers in its useful life. So SOYD is. So this also gives the annual depreciation more accurately than that of the earlier method. So most appropriate depreciation method will depend upon the type of the assets or movable property, immovable property, then the properties with the movement and the motorized machinery properties have got more and more depreciation than that of the non-movable assets like the buildings, etc. So ultimately there will be declining balance and some of the years digit should be used. So the assets such as fences, buildings have little or no market value, or without land they are attached to and they provide a rather uniform flow of the productive services over time. So even though they are important for the protection, but their value cannot be considered for earning purpose. So for this straight line depreciation is very much appreciated. So here this is one of the model record of the farm where in which we can see that especially you can see that the farm record is measured in such a way that Then here you can see there is the farm inventory worksheet is there. Then also we can go through the different columns of this particular chart is concerned. For example, here you can see the farm inventory worksheet for the year ending in the December 31st. So the financial year or the year, sometimes somebody is going to calculate the year at December 31st, and also sometimes in the systems they follow the financial year. This is a routine year and financial year. Anything has to be maintained. So here the farm inventory worksheet is like that. Then in the column number one, we are going to enter all the item like the cultivators, harrows, assorted tools, real estate like land, then upland, lowland, farmhouse, barn, working, then the horses, then cash income flows, rice, standing crop, corn, then standing corn, and apart from this one, the beginning of the year, especially 31/12/2023 or 24, so ending year, then next year maybe. So here we need to mention as number, then value, then number, total number, then value. So ultimately the net change in the inventory point will be noted. So the farm inventory record for simple computation is also available, like the machinery or equipment or tools. Then the cultivators. So here one example is the it has brought in the year 2005, then at the rate of some 50,000, then is expected to last for 10 years with the salvage value of 5,000 rupees per year. So the another thing is the second hand rice thresher purchased at a rupees 30,000. Then it's 2 years ago and it's expected to last for another 3 years because that original usage has to be reduced here. So another 3 years with zero salvage value, etc. So this type of the calculation need to be done. Then apart from this one, the harrow, then assorted tools, then totally the real estate like land. Of course, so there may be 8 acres, and among the 8 acres, all will not be fertile. Then 5 acres upland, 3 acres hectares or lowland, etc. So they will be valued at different type of the money also. Then of course the land, etc., will not have much depreciation when compared to the other goods are concerned. Then the farmhouse, even though it's a small or big, it will have either 1 unit, 2 unit, or the number of units which is required as the number of the heads of the animals go on increasing. Then the barn, usually the barns will have depreciation of 10% average. So apart from this one, the third one is the working animals. So the bullocks and the horse, which may be required for especially uh, going inside the farm, etc. It may be required. Then the fourth point is income. For example, there are certain rice is there, then animals are there, then the cattle, sheep, goat, pig, they may be sold. At the same time, in the end of every year, we need to have the total number of the animal heads, total number of the animals sold, and the newly born cows need to be maintained. Then marketing cattle. For example, the five heads in the beginning of the year, three of which are valued at 80,000 rupees per head, or sometimes the especially 80,000 or the last November, the cost is less. Now it is valued more also. So at that time, the profit, net profit, etc., need to be maintained. Then, apart from this one, there is a balance sheet. What's a balance sheet? It's a systematic organization of everything owned and owed by a business and individual in a given point of the time. So, the balance sheet summarizes the financial condition of the business at a point of the time. It is a snapshot of the financial solvency. For example, insolvency means it is under loss. Solvency means it is under profit. So the business and most commonly requested document by a lender in reviewing a loan. So it includes listing the assets and liabilities that conclude with an estimate of net worth of owner's equity. Then finally, in a balance sheet, the end column is balance. In the balance sheet comes from the requirement that ledger be balanced through the basic accounting equations. So asset is equal to liabilities plus owner's equity. That's the simple formula how we are going to calculate. So a balance sheet can be completed at any time during an accounting period, and one of the advantage of computerized accounting system is ease of with an interim balance sheet that can be prepared. Then the auditing is also another part of this balance sheet or accounting process, and most balance sheets are prepared at the end of accounting period, maybe end of the December 31st in most of the countries. So So it is necessary to have a balance sheet available for both the beginning and end of the year, both of the thing. One, we should have the accounting system or balance system. For example, here a simple balance sheet has been shown. Name of the firm, then date, from, and to has been filled here. Then the assets, then liabilities. Both columns should be prepared. So, what are the assets? Which are present current assets, then intermediate assets. For example, a calf is born to a cattle or the cow, then intermediate assets, then sometimes the fixed assets like the buildings, etc. Then we are going to calculate the total assets here. The total assets and followed by the liabilities means current liabilities, maybe a bank loan, or intermediate liabilities, maybe the feeding, etc. Then long term liabilities, especially the EMI of the buildings, then equipments, etc. So this will have the total liabilities. Then the net worth, owner's equity means owner's part. So the total assets and total liabilities plus to owner's share, all this would make the balance sheet. So here is another balance sheet, especially of a cattle farm. Then the, of course, so the year end has to be maintained. Then assets are divided into fixed asset, then the intermediate assets, current assets, and total current assets. So the fixed asset are the farmland, then building, then other facilities. Then we need to calculate the total asset value of that immovable property, what we can call as the immovable property. Then immovable property includes the poultry, if it is a poultry farm, then cattle, if it's a cattle farm, pig, or sheep or goat. So we are going to calculate per head cost, then going to calculate the total asset cost. Then apart from this one, the machineries and equipments are also one of the part of the intermediate assets. Then the vehicle which is required for transportation or for the personal use, then total intermediate costs are also calculated. There will be total fixed cost, then total intermediate cost, or ongoing costs, or it's also called as the current cost, which includes cash savings account, then supplies, then securities, then accounts and receivables. So ultimately, this will be the total asset in a particular financial year. And apart from this one, the liabilities are long-term liabilities. The farm or the land or the buildings they are called as the long-term assets. Then every year there will be depreciation. There is the building depreciation. Total fixed depreciation is there. Whereas in case of a cattle farming, the intermediate costs are the machinery depreciation, then vehicle depreciation, then equipment depreciation at the rate of 5 to 10% of the total cost. Then total depreciation will be calculated in the liabilities, then ongoing or current accounts payable, then bank loans, accrued taxes or taxes payable, and ultimately this will be total, then total asset minus net total liabilities will be the net properties or total liabilities and net worth will be calculated. Then definition of some terms. So the assets, anything value owned by the business is called as the asset. Here the cattle or the livestock is an asset. The poultry, the piggery or any animal or any equipment is an asset. The land on which the animals are grown is also an asset. And goods that have already been produced, such as the grain. Suppose in case of livestock farming, the grain cultivation is also another business, which are the parts of the feed manufacturing plant, and the fodder growing plants are also called as the goods that have been already produced and can be sold easily and quickly without disrupting the future production activities. And one can also sell these to another person and gain some profit. Then assets are the machineries, breeding livestock, then land are owned primarily to produce agricultural commodities that can be sold to produce cash income. So the selling income producing assets to generate cash would affect the firm's ability to produce the future income. So they are less liquid or illiquid. And illiquid assets are difficult to sell quickly and easily at their full market value. And ultimately, the balance sheet normally has assets and liabilities. Both sides it will be shown, then categorized on the basis of liquidity or ease with which the assets can be converted to cash. Then current assets are the one which are actually present on the hand at the beginning of operating cycle that are expected to sold or consumed by the end of that particular cycle. So here the feed in the storeroom of a cattle shed, grains held on the sale, then sometimes the fertilizers, seeds, then cattle feed, market livestock, marketed securities, then also the birds, then pigs, etc. So they are also one of the assets. So intermediate assets are assets that have expected to useful life up to 10 years. Usually the large animals are called as the intermediate assets. Their lifetime is about 10 years. So then these are usually depreciable. For example, the cattle, tools, machineries, equipment, and also the breeding livestock. So these are intermediate assets, especially in case of a cattle farm. So some of the farm supporting systems are there. Of course, So they need to be kept in a farm. Apart from that, of the animals like the a vehicle or a tractor or any other asset used for land cultivation. Then breeding livestock also certainly have a major impact on livestock farms. Fixed or long-term assets in case of a livestock farm are the one which are useful more than 10 years. So the major proportion of these assets are liquidated. So here the land, permanent buildings and other uh, can be sold once and for all. So not a partial or any other thing. Whereas the cattle or any other thing can be sold and once again they can be purchased from a shandy. So the liabilities claims against the business, financial obligation owed to other person or the business or also to the banks. And the ongoing or current liabilities, financial obligations due within that particular year. So this include the named as the insurance of a cattle. Every year the insurance has to be done. And apart from this one, there may be certain taxes or rent of the building which is owned by the owner for the expansion of the farm activities. Then principal of the loan amount, then interest of the loan amount, or these are the ongoing liabilities, or they are called as the current liabilities. And intermediate liabilities are the one more than year up to 10 years. So the example of this category is the livestock, especially large animals. For example, if a farmer has cattle, sheep, goat, pig, buffaloes, etc., the buffaloes and the horses and livestock, these are under intermediate liabilities. Long-term liabilities are financial obligations due over more than 10 years. So the mortgage of a land, then long-term lease contract of the land, both of these are long-term liabilities. Then balance sheet analysis can be made on end of every year or at any given point of the time, depending upon the solvency or liquidity. Solvency measures the liabilities relative to the amount invested in the business or net worth business. Whereas the liquidity means it measures the ability of the business to meet financial obligations as they come due without disrupting the normal operations of the business. Then we'll see certain example. So the liquidity measures like current ratio, current asset value, current liability value. So the ratio of this thing is called as current ratio. So a value higher than 1 is preferred since a value of 1 means there are at a given time, point of time the value of the current asset and current liabilities are always equal. While there are sufficient current assets to cover the current liabilities, there is no safety margin of price and other factors, whereas the current asset value need to be increased for better profit. Then working capital means it is a formula is put current assets minus current liabilities. It's called as the working capital. The equation computes what remain in the business if assets are totally sold once and for all, maybe due to so many reasons. Then even if you do not maintain this particular thing, then this goes by the guessing. Then there are a lot of terms are called as the debt asset ratio, total liabilities, total assets. Then equity asset ratio, total equity divided by total assets. So the measures which part of the total asset is financed by owner's equity, higher value is preferred because but no exceeding 1. A value of 1 means the liability is totally 0. Hence, the accounting procedure need to be defined in debt equity ratio, then net capital ratio, just like the debt equity ratio is total liabilities or owner's equity, then net capital ratio is the total assets divided by total liabilities. So a net capital ratio of 1 means results from zero equity, and higher values indicate the greater degree of solvency, means it is under profit. For example, a value of 2 means the liabilities is half of the assets and equal to equity. So this is often considered as the minimum safe value. So one need to know this thing, because the net capital ratio is 1 means, then it indicates a greater degree of solvency, means the firm is under profit. Then debt structure issue, current liabilities, total liabilities, etc. But this cannot be more than 100, because it shows what proportion of current liabilities are total liabilities and can be converted to a percentage by multiplied by the 100. So it cannot be greater than 100 at any given time. Higher values means a larger portion of the total liabilities which must be paid within the next year, which would be required more cash. So here there are few tables. One need to observe this particular table. Then the table number 1, especially in case of livestock farming, this says about the cattle birth identity records table. For example, the here the order, or what we call as the serial number. Then if you are going to put a tag to the animal, then the tag number or any RFID number of the cattle need to be put. Then next one is the cattle birth identity record template, is the breed of that particular calf born. Then birth date, whether it's a male or female. Then the maternal number, if it is noun, we need to put it. Then also the paternal number, the bull used for crossing that particular animal, or the straw on which we are going to do the artificial insemination, then added on the computer. So these are, if you enter simply, this will be added on the computer system. Then apart from this one, there is one thing called as the out of herd records table. It is also similar, but here the gender is equal, maternal number, then paternal number, period, then leaving date, means sold date and reason for leaving the herd. This need to be maintained as table 2, as a ledger or any other thing. Need to be maintained properly with all the data which need to be input. For example, the third one is the mating or progeny yield records table. So this is also containing the breed, birth date of that animal, then insemination date is also required, bull number which is written on a straw, or else manually the bull may be named. Then the result, the pregnancy test, when it is going is done, time since last birth, dry exit number date, then probable birth date approximately, then date of the pregnancy or the pregnancy time duration. So it changes from the cattle, sheep, goat, pig, etc. In each animal, the gestation period changes. So the table number 4 contains the calf record of cow's table. So this also contains the ID number or the ear tag number, then breed of that particular calf, date of birth of a particular calf, then birth sequence, if any problems of the birth, etc. Then always they need to be marked and segregated. That's the calf ID number. Then the male or female is another column need to be put. Then the date of birth of the calf. Then the another thing on the cow's record is mother's age at birth. So this is also important. How much that particular animal is pedigreed or it is breeding uh, potential will be calculated. Then table number 5 or the record number 5, same type of the records are maintained. Then milk yield record table. So it also contains the ID number, breed, last date of birth date, then the time since last birth, how much duration is spent, then milk sampling date. So everywhere the pooled milk will be sampled to test it for the total counts, especially the neutrophil counts. Then milk sampling period, especially whether it's in the morning, evening, etc. Then total milk yield of the particular animal. Then fat percentage. The HFN jersey, one need to know that the fat percent is comparatively less to that of the other exotic or crossbred animals. Then that of the in the milk also the fat percentage, protein percentage, lactose fermentation, then somatic cell counts. All these things need to be calculated by the person who is in charge of that particular lab and the necessary inputs to be given by that particular institution head. Then table number 7 is the sheep or cattle or any other birth or ID records table, because these need to be maintained throughout the lifespan of that particular animal, or if it is sold to some other persons under some situations. So here the maternal number and paternal number both need to be mentioned very properly. Then this can also be added on the computer instead of the initiation date. We can also put the value of all these things, putting in the Excel column or in the, whereas the table number E8 contains the mating records table. So partly let us go the RAM registration number, its body weight, then its birth date with that of the time, etc. Then mating start and ending date if it's a physical method, especially in free mating system. So ultimately, the observation is very much required in case of the cattle farming is concerned. Then lastly, the sheep body weight or body measurement, both of these things can be maintained in a same record by dividing the columns into several aspects. It also contains the original or basic formula like the cattle breed, the health date, gender, then birth type or natural birth or cesarean birth, etc. Then total number of maternal means calving number. Then our maternal body condition score, everyone knows what's a BCS, etc. Then I will go further so that the birth weight after 3 months also the 3 months birth weight, 6 months birth weight, and also the adult birth weights need to be recorded in this particular record using a proper weighing machine. Then coming to the conclusion part of these farm management practices, especially the account keeping. So we need to ensure a sustainable profitability in an animal production system. And this depends upon the effective, accurate, and regular record keeping. And a farmer has to maintain the record. And if he cannot afford any computer or the software, at least he can write it down in a sheet or the ledger, etc. So the different parameters, the columns, etc., to be put properly in proper direction, and these are extremely important in terms of the health record, then maintenance record, the feeding record, breeding record, all these things. Then purchase of a new animal and introduction into the cattle farm also. So then sometimes some animals need to be fattened, and phenotypically they need to be upgraded. So in this aspect, the records to be arranged should be a solution to operation of the enterprises, and the gain and profit, etc., will be measured by the accounting procedure. Hence, it should be very simple and easily it need to be updated. So these are all some salient features of the record keeping and also the management. Then with this, we will end today's class, and please attend the notes or the question paper every day. It is having some 24 hours time. Then one need to